Now, when times are uncertain, and there's bucket loads of uncertainty around at the moment, we've got Ukraine conflict, interest rates, inflation, and a whole load more, then historically gold would get lively, more interesting, more tradable. Now, in this week's report, I take a look at the price and see where it might be heading next. Is it now time to start trading gold? Well, let's take a look. Now, straight into the weekly line chart, and we've really got to focus straight in on that pink triangle pattern I've put slap bang in the middle of the chart. And really we can see, I've highlighted the 4 touching points to the top part of that triangle set up, and I've left the analysis on from previous weeks so we can see how it progresses, and we can see now price knocking at the door to break on higher, and I've used that sort of flag pennant setup, and you can see that long pink line on that breakout. That's a potential target, and it's into the early to mid $2,000 range, so it's poised at the moment to be more bullish, and it's going to just need some little trigger. I think maybe the Ukraine conflict to possibly push it on up higher. And really from the line chart, the weekly line chart, that's the big takeaway. Look for that pattern and look to see what the price is going to do outside of that. To back the longer term price analysis up, we've got a bit of sentiment to, like I say, marry into it, and at the bottom there we've got the seasonality, and at this time of the year and through to March, springtime, very bullish for gold. Interesting, we're in conflict in the commitment of traders data. See the 2 green arrows, the black line there is the large speculators, and the top is the price, and normally we would expect them to be moving in tandem, so a bit of a divergence still there at the moment, and I'd get more bullish if I saw those moving in the same direction. So at the moment it's a bit neutral to a bit undecided there in the commitment of trade data, but generally overall a more bullish sentiment feel. Now, for those of you after more defined entry points or reversal points in the price, then we're still in this bullish reversal setup on the 4-line break chart. We've gone through the 1785 and 1805 areas. Next one is 1870, 1877 for a more consistent break upside, and always try and marry that in with the stochastic indicator at the bottom there, which currently is in the bearish phase. I wait for them to cross, and like I said, that price to be where you want it before going in. So what can the more short-term daily Heikin Ashi chart tell us? Well, actually at the moment it's all looking a bit flat still. We've got bullish signals at the bottom 2 lines there, but volatility and volume reasonably stayed flat under where it normally is along its longer term average. And if we head on to the price, we can see the pink and blue shaded areas. That's the 2 standard deviation regression bands. Price trading within that in a sideways trading range, but you can see price just breaking out above the 2 pink line breakout box setup system that we've got, and heading on towards the upper of those standard 2 standard deviation regression bands. But at the moment it's a bit sideways with a weak bullish feel to it. So in the real short term, we've got the Renko chart set with a $5 block size. All the signals at the bottom there, 3 lines, are bullish. Heading up on to the price, well, it's broken out above the 2 line pink box breakout setup system, and breaking up through that 61.8% Fibonacci line. I've left on those 2 yellow shaded areas to show you where key support for the price has been over the last few months, but at the moment it's looking reasonably bullish. And if we use that Fibonacci tool to try and work out some potential targets upside and downside, then we've got possibly first of all up to those highs around 1870, then 1913, 15 area, and then up to later 1900s, and to the downside a lot of noise through the early 1800s, that 50% Fibonacci line, and then those two yellow shaded areas at 1791, so 1800 zone, and 1760 to 1750 zone to the downside. But overall the short term looking a lot more bullish. In terms of the score then for gold this week, I'm going to stick with my weak bullish outlook just based on those technicals that we can see at the moment. It does help that there is some strong fundamentals pushing behind it too, but if we look at Heikin Ashi, probably a bit more neutral than the Renko. And in the top right, you see the technical sort of seasonality, sentiment outlook still remaining reasonably bullish, and we've got a 4-line break sort of target entry area for you at $1870. Down into those targets, the upside 2.75, 4.5 to 1, looking quite good there in comparison to the downsides for the bears, 0.75 to 1 and 1.25 to 1. But overall, still weak bullish. And if we cast our minds back to that weekly line chart, just hovering the other side of that pink triangle pattern for a possible breakout upwards. To me, it feels like gold is waiting for that spark, both fundamentally and technically, to break out through that longer term triangle pattern that we saw in the weekly line chart, to the upside. Now let me know in those comments below whether you agree or disagree with that analysis. Where do you think the price of gold is heading next? Let me know. And if you want to know where you can trade gold wherever you are in the world, whether that's the US, Europe, Asia, Africa, South America, I'll put some links in the description below that you can follow so you can start getting involved trading the yellow metal. Now if you like today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I will be producing. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.